Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a great day in the markets today. And in today's action, well, the volatility continues, especially in our tech and growth names overall. It started off as a very bumpy day, a lot of red early this morning, and then the bulls bought the dip late into the morning and into the early hours of the afternoon. At one point today, the SPY was down over 1%, and at one point today, the QQQs from yesterday's close was down almost 2%. Some names on the big tech list and the fan favorite list were also down about 8-9%, especially names like Palantir. And I hope you guys enjoyed yesterday's video. Apparently you did, because over 6,500 of you watched it and I got almost 500 likes. So thank you so much for your engagement in yesterday's video. Hopefully you learned a few things about those monthly consolidation levels. And today, if you were paying attention, as I was saying in yesterday's videos, sometimes you don't actually need the stocks to come down into their monthly 12 EMAs to actually get a chance at playing them, especially if you're the type of person that enjoys selling puts in the market. Take a look at a few opportunities that were in the markets today. If you were paying attention, Palantir, right? The Palantir 12 EMA is all the way down here at about 105, 110. Take a look at some contracts that you could have written for next week, August 29th, the Friday close. I have pulled up right here the 110 contract. Look how high to the left-hand side of me right now. This is the contract's price throughout the morning. These contracts made their way up to 70, 75 cents. Over the 0.5% rule that we look for, and by the end of the day, they closed all the way down there for 14 cents. Nice little bounce, but even if it wasn't, if you would have been locked into that contract all the way through next week, you would have had a margin of safety, a huge margin of safety on these contracts of roughly 25% extra decline by next Friday. Another contract that we were looking at yesterday was TSM, one of my favorite companies in the entire market, and their 12 EMA is right down here into the low 200s with very nice support. So when you line up support with some potential areas of interest, you end up with some very nice contracts. Take a look at the contract that we were looking at this morning. It was a bit higher than 200, but that whole range was pretty much free and available all day. If you take a look down here at the 2075 contract, you will see that in the early hours of the morning, when the stock was down roughly 3.5%, these contracts in around the 200 strike, 207, even the 205s, guys, were available pretty much for a good part of the morning for very good amounts of premium with a very large margin of safety. For TSM to pull back all the way down there by next week, you would have been looking at another decline of roughly another 9 to 10%. So this is how I like to play this current market environment, with a lot of volatility on a lot of very solid names and playing them way far under the market with some short put orders. So in today's video, we're going to take a look at a few things together. Number one, of course, we're going to have to do a quick recap of the rotation that once again was identical to yesterday. A lot of tech names were down, a lot of growth names were down, but what was there to pick up the slack? The entire rest of the market, XLF financials, healthcare, and also the defensive side of the market, consumer defensives, utilities, real estate, and a couple other sectors. So we will do a quick rotation recap on all of our major sectors using technical analysis, of course. Thereafter, we will dive into our big tech name list, which once again, sadly, we're all in the red. Where can we maybe find some opportunities shortly in these big tech names if they continue their drops? I will be going shopping, and I'll let you guys know exactly where we're going to be doing that. And towards the end of the video, guys, of course, we're going to be getting into the biggest gainers and losers of the day. A lot of names to the downside today. Many names down 3, 4, 5, 6, 7, 8, 9, 10% overall. So we'll take a look at some of these names that we explored yesterday and try and price out some levels and some strikes in the event that you're willing to sell options against those positions. And we'll also take a look at some of the biggest gainers of the day, because yeah, there were some, and there were some very interesting ones as well. So we'll take a look at this entire list at the end of the video, and that'll be it for today. Biggest portion of the volatility, of course, comes in tomorrow, where we get the S&P Global Manufacturing PMI and Services PMI, 2 indications of inflation. And then on Friday is the big day. We get Jackson Hole, where Jerome Powell will be speaking. And this event usually has been a nothing burger, guys. They've been doing this event like every year for the past like 25, 30 years. It only gained notoriety because 3 years ago, Jerome Powell crashed the markets when he gave a speech at Jackson Hole, when he was basically saying, yeah, inflation's a big problem and we will keep raising interest rates until it hurts. And we don't care how bad it hurts, but we're going to tackle inflation. Ever since then, there's been kind of a negative connotation surrounding Jackson Hole. We might not be expecting too much of a difference this time around, though, because we already know Jerome Powell's stance on many things. But a lot of people are looking forward to the Jackson Hole meeting. And of course, tomorrow morning, guys, we have big earnings. Walmart. So everybody's going to be looking at Walmart. How is the health of the consumer? If we remember prior earnings from just a few short weeks ago, the consumer, as reported from the banks, from the credit card companies and several major other large corporations, the consumer was kind of divided, right? Your middle class and higher income class cohorts were doing well, but a lot of the pain points were on the lower income demographic. So we will see tomorrow if Walmart says the exact same thing. But tomorrow and Friday, probably our biggest days of macro or earnings events for the market. But today and yesterday were probably the two biggest days of just sheer price action volatility. So without further ado, let's jump right into the action today, shall we? The SPY down about 0.27, the Q's down 0.59. But as I said, it was a lot worse throughout the morning. But we did have some very short-term oversold conditions. The SPY coming right down into here, cracking well into the low 20s on the RSI. It's been a long time, guys, that you've had an hourly RSI on the S&P down into the 20s. Matter of fact, you would have to go all the way back to when we got liberated back in March and April. And the QQQ is the same thing. The RSI actually dipped at 12 to 13. That is a very low read, guys. Matter of fact, that was even lower than the levels that we got back in April. Now, obviously, the price action was different down there. There was a lot of very big drops. But this drop has been so fast that it triggered almost the same level or worse in terms of short-term RSI that we had back here. So it's been a while that we've seen such crazy volatility, such rapid drops in a lot of our favorite tech names. And as I always do, I'll do my best to bring to you guys some very logical reasonings and some very logical price action levels that we should be looking at. So in terms of the rotation today, guys, it was once again a similar day to yesterday. Defensives and the bottom half of the market doing really well. Healthcare, financials, and consumer defensives, industrials, a little bit energy too, holding up the market, whereas big tech and some semiconductor names sadly came down again. Nice little drop and pop on NVIDIA. They only closed down about 0.14%, but if you were looking at this name all throughout the morning, guys, it was super volatile. Look at this big candle on NVIDIA. Instantly went down 3.5%. And then the rest of the day, the bulls started buying the dip as we did have some very short-term oversold conditions in some of these names. So we're keeping an eye on some of these short-term oversold conditions. No daily oversold conditions, no 4-hour oversold conditions just yet. But when you get some short-term 1-hour oversold conditions, it can result in a temporary bounce. But as I always say, right, a bounce is just a bounce until you actually get the trend back. So we'll see if they're able to do that over the course of tomorrow and Friday's session, or if they just get unwound with some unfavorable Walmart earnings or unfavorable Jackson Hole speeches or unfavorable macroeconomic releases with S&P Global. We will do, as we always do, just take it one day at a time. But today, your biggest losers of the day, of course, were once again some of the big tech names, some of the high-flying retail names as well. Onto the one-day relative performance, you can see that even better. Defensives, energy, healthcare, financials, real estate, and utilities leading the charge. Same thing as yesterday. And to the downside, the rotation out of tech, at least for today, did continue. Cyclicals, technology, communication services to the downside, which leaves you with, once again, a very bifurcated market on the one-week relative performance. Only some defensive sectors were on the highs, whereby all the growth stuff is kind of still down. Technology still your loss leader, 3.3% to the downside overall. And the QQQs, I mean, this has been a pretty well, not considerable drop, but a very rapid drop to say the least. In the last 5-6 days, the Qs were down from the top to the bottom around 4.1 before retracing a little bit today. And we do have a lot of momentum to the downside right here. It's a very large retracement size. So the V-shaped recovery without any positive news from tomorrow's inflation reports and from Jerome Powell, it's going to be a bit tough to just V-shape this as if nothing happened. The bulls do have their work cut out for them, but they did not lose the daily uptrends just yet. Speaking of the trends, let's jump into the charts right away. The S&P, as a matter of fact, still in a daily uptrend. The retracement size right now on the S&P is not that large, talking about roughly about a 50% retracement size. So this one is still anybody's game. The one thing that's keeping the S&P afloat right now is definitely the rotation into other sectors, because without them, we'd be down definitely a lot more. We are still rejecting right now from the 26 EMA, which is good. We've done that a few times in the last couple of months, right? And we do still have a daily uptrend underway. However, as I was saying with the QQQs, if you give back too much of this move, it becomes very difficult probabilities-wise for the bulls to just V-shape this without any more good news. As a matter of fact, it either favors a tightening range or the erosion of the uptrend into a possible downtrend. But we also know that who controls the higher timeframes right here? It is still your bulls. We are still sitting in a very nice weekly uptrend. So these dips are for buying, but only with the right strategy. If you do not know where things are going to go because of the fact that we have somewhat awkward seasonality, because of the fact that we have a few volatility catalysts in the next few days, talking about, the inflation numbers tomorrow, Jerome Powell on the Friday, Walmart earnings tomorrow as well. If you don't know where it's going to go, well, there's a strategy for for that. And that's why I love selling put options far under the market, guys. If you want another example, right, I'll just show you SOFI this morning. SOFI this morning was down like 5-6% before recovering a bit of that intraday. Take a look at these contracts, August 29th, the 18.5 strike. We're paying like 12-13 cents early this morning. You would already be up over 50% profit if you would have just taken that trade. Just paying special attention to the levels that I was describing yesterday for SOFI. Any very large dips usually gives you some very good deep opportunities under the market, right? That would have been another decline on SOFI, you know, to the end of the day into next week of about 12%. And that was kind of where I wanted to start a position, right? A little bit there and a little bit down here, further down into support, further down into the infamous 12 EMA, but this was a very good starting point to kind of DCA into a position on SOFI. So there were opportunities all across the board today if you're willing to play the volatility. And that is why I love short put options, because when you're not sure if something's going to go down there, the best thing that you can do is throw out buy limit orders at prices you actually want. And if it comes down there, you end up getting the shares. And if not, you're just able to make some very good money pocketing that very juicy premium, making about 0.5% to 1% per week. When everybody is trying to panic and, you know, sell down here and then buy back up here, you are just chilling and you are selling options way below the market, and you are perfectly fine being assigned at those you know, very low prices if it does come down there, right? The QQQs, largely the same. However, the QQQs, guys, we're tracing a little bit more. So as I said, it's going to be tough for the bulls to just V-shape this as if nothing happened. And the best case scenario that they have right now after coming down for a 782 retracement is probably going to be the two-step daily uptrend recovery process, because just a straight continuation of this uptrend right now is somewhat unlikely. They did do it here, though. This was like a 100% retracement to the daily higher lows. They were able to V-shape, but it's going to take some pretty good news in the markets to just act as if this drop never happened, if the rotation never happened as well. You can either devolve into some form of an awkward tightening range at the top and go for it, or if you get the daily downtrend, you guys know the drill. We talked about it yesterday, looking for a weekly higher low, and this level is still also your weekly higher lows, 552, the 12 EMA, and on the monthly timeframes, in the event that you do pull back more throughout the rest of the month of August and early September because the news cycle just isn't favorable for the markets overall, we got a whole bunch of support down here, guys. Prior all-time highs should be current support. The monthly 12 is buried right there as well. That would be a top-to-bottom pullback of the Qs of roughly anywhere between 7 to 10%. A natural correction in the event that we do come back into some unfavorable seasonality. And then I would just be heavily buying the dip down here, looking for the monthly higher lows for further trend continuation. But as you guys can see, right, I am not trying to predict the markets right now. I'm also not trying to buy every single dip predicting that this is going to be the market bottom with some short-term call options. No, the best strategy right now when volatility is high and you're a bit uncertain about where the price action can take you, it's a battle between the bulls and the bears, it's a big rotation. Your best option, no pun intended, because they are options, your best option is to sell puts under the market on your favorite companies at levels that you do not mind being assigned. And when the volatility is high like this, you'd be surprised. You can get some pretty crazy levels on a week-to-week basis, especially since everybody is buying these puts, thinking the market is just going to fall off a cliff. So if you want to take the other side of that bet, well, you guys know what to do. Just sell those puts to all those people who are gambling on weekly options, and you should be doing quite well. Moving on to XLF financials right now. Financials up about 0.51%. Not the worst day for financials at all, and we still do control the daily uptrend. Your higher low is still set here at 52.26. If you go for the furtherance of the uptrend, you're going to be looking to attack, of course, the all-time high region. But as of right now, it's a bit choppy on financials, right? They've been reacting very nicely to support below 52 down about $50. This whole $2 range. Prior all-time highs, newfound support for the bulls, but it has been choppy. I do agree in that respect. So just keep an eye on financials. Still a sector that's coming back in a decent way. The banks are coming back. Companies like Visa, companies like MasterCard are really, especially MasterCard's leading right now. Visa is lagging a little bit behind. Visa is still one of my favorite catch-up trades for the moment. And even something like Berkshire, which was just wildly out of favor. Well, look at the weekly MACD right now, trying to do its best to unwind the bearish momentum. We now have a very nice engulfing move on the weekly, and eventually the bulls here are going to be looking to reset the weekly uptrend. This was a very easy monthly time frame trade, guys. Really easy. Pull back into the 12, prior resistance, current support for the markets. It got a little bit bumpy there for a while, but still looking quite good, looking for that expansion on Berkshire overall. Moving on to healthcare. Healthcare continues to outperform above the 137. We will see, is healthcare able to close above this infamous 137 area that's been plaguing it as resistance for a better part of the last 2 months. Looking not too bad, follow through from the massive candle that we got just last week. Overall though, guys, healthcare is very choppy. It's tough to say whether this is going to be the final break or whether we might just have to come back, accumulate a little bit more, and run. But the key word here is accumulate. If you're trying to play the healthcare sector overall, you should have a long-term mindset and not necessarily be trying to time the precise breakout for some weekly call options. The call options need to be long dated, in my opinion. Leaps should do quite well here, and you are accumulating in an area that's been historically very good, the 50 monthly EMA. Very good level of historical accumulation. Whenever it's come down there, it's been a good buying opportunity. It can be choppy for a while, but we also have tremendous amounts of support from 2021 through 2023, and healthcare has been historically undervalued. So rather than playing individual names such as UNH or such as Eli Lilly, if you guys just don't know what to pick, if picking healthcare names is just not your forte, but you want to play healthcare, well, maybe you just play the entire sector overall. At least that's what I'm doing. Even if I do know those companies, I'm still just playing the ETF, being a case of, you know, rising tide lifts all ships. So I don't have to pick and choose which healthcare company I'm doing. Moving on to SMH right now. SMH down 0.66, but look how much it was down earlier today, guys. SMH was down another 3+%, and they were able to grab all of that back. It was big time short-term oversold conditions right here. The hourly RSI dipping down into the teens. The last time that's happened, you probably guessed it, all the way back here when we got liberated back in March and April. So the bull's underway with a little bit of a bounce. We got a nice hourly trend change here, but a bounce is just a bounce until you can get the trend back. And as you can see, they did flush the daily higher low right there, 282. So we kind of lost the uptrend. We will see, do the bulls have it in them for a full V shape? I don't know, but NVIDIA earnings is probably going to be a catalyst for that. I'd be highly surprised if we V-shape this entire move before NVIDIA earnings, which are next, I believe next Wednesday. Let me just check real quick. Yeah, it's going to be Wednesday, 27th of August. So maybe SMH stays a bit muted, but nice to see the bulls playing some defense, a very wide area here. Haven't really been able to break above it since the late stages of July. So we've kind of been a little bit awkwardly sideways here, but the bulls have not lost control. Your weekly higher low is still set at about 280. Unless we crack that level, guys, you can't really say that we've unwound this leg of the weekly uptrend. But in the event that we do, you guys know exactly what's going to happen, right? Just very healthy monthly consolidation, possibly going for the back test down here, 260. That'd probably only happen if we get a further unwind of semis, and maybe if NVIDIA earnings are not well received by the market. Into SOXX, if that's your favorite semiconductor ETF, the weekly higher lows are still 232. We've been moving a bit awkwardly here. So if we don't get the pop above, and if we just do some further consolidation down here, well, you guys know the drill. Very nice monthly move. Just looking for some monthly higher lows here. Monthly accumulation above support, which is 235 to 213. So I still do enjoy either selling puts on individual companies, or if you really want to go for the volatility, on big red days like today, you can find SOXL short puts for very, very deep below the markets, but you got to play this one carefully, and you shouldn't play with too much size, especially those 3 times leveraged ETFs. But if you want to take a look at what was happening here this morning for next week, which is NVIDIA earnings, so it's going to be a volatile one, look at these 18 strikes. They went up almost to 1% very early in the morning, and they are now 50% profitable. But even 18 from the low of this morning, guys, 18 would have been a very, very decent region to play these. That's an extra 24% on SOXL, meaning that the SOXX ETF would have to drop a whole 8% itself by next Friday, which would make this one come down 24%, and 24% casually is the next large area of support overall. I mean, it's down all the way down here to the lows of May, but also into SOXX. That would be kind of the bottom end of the support region right here, all the way down 8% bottom end of these guys. So there were some very nice trades if you were quick enough early this morning and benefited from that volatility. So just keep this strategy in mind. When you get the big red days, you can find some short put options really far under the market, and you may just want to take that bet if it's a company that you're looking to possibly play. Looking on to IWM Russell right now. So the Russell is still sliding out of its resistance area, which is largely 232 down to 225. Not looking too bad. The bulls still do have the daily uptrend. We are reacting from all of these guys right there. Very tough to know, though. Are they going to be able to break or not? I think they're waiting for comments about the pace of interest rate cuts, of course, because interest rate cuts are the one key factor that really drives the Russell more so than anything else. In terms of the weekly time frame, it's not looking too bad, but you can see that very clear area of resistance. It's a big one. It's prior all-time high regions from there, here. Although we do have some pops above, you can see that this area has been the most challenging one for the bulls overall. So they're still getting a bit stopped out right there. If we do pull back, you got a lot of space. Anything above 212, looking maybe for a back test down into support. So right now we're just basically trapped in some form of a consolidation between two ranges overall. Take a look at the XLP. We were talking about XLP yesterday, looking for the breakout, and they actually got it. They weren't able to close above the line right here, which was 83.25, but very nice daily uptrend continuation on XLP, looking for the infamous weekly breakout of this chart after being flat for a better part of the last, 1 year? We might just finally be looking for it. Some names are coming alive more than others. Obviously, Walmart has earnings tomorrow. They had a very good day today. We will see if they can continue that momentum into tomorrow. Costco, very nice new daily uptrend as well, getting back above the daily EMAs and setting the brand new uptrend, which means that weekly consolidation is finished after about 2 months and maybe looking for a little bit of appreciation to the upside. But even companies like Pepsi's been doing really well. Coca-Cola's been doing really well. I mean, they haven't really gone crazy like sometimes you see Palantir go crazy, right? But nice to see that sector participating overall. Most of the names in there were participating today. Moving on to XLU utilities. Utilities still largely flat, just consolidation at the highs right there. Cleanest time frame, in my opinion, is still this beautiful weekly uptrend. If you're looking for a higher low, you might just be looking for the weekly 12, which would be around 84. That wouldn't be too bad, but utilities holding their own, able to etch out some green today. And lastly, real estate. Real estate's been doing a good job popping off these lows, but we got to pay attention, guys. The real estate sector probably will move with any comments that Jerome Powell makes on the Friday session, and also into obviously the September rate cut for the Fed, which is kind of mid to late September, September 18th, if I'm being precise, right? Looking for the uptrend after consolidation sideways since the month of May. Few little things within real estate have been moving, such as the home builders. They've been kind of front running the possibility of rate cuts. If we get a back test down here, nice little long reload area. If ever they're disappointed with the pace of rate cuts, whether you choose ITB, which is the home construction ETF, or the XHB home builders ETF, that would be down to about 106, back test the EMAs. Looking pretty good for this breakout. And you guys know me, I've been playing the heck out of Rocket Mortgage. If Rocket Mortgage does the same thing and pulls back a little bit, you will find me reloading this trade probably around 16, 17. So keep that in mind. The VIX today, as a matter of fact, was up at 1.8%. Early morning volatility. Look at this massive pop, 8-9%, and gave it all back. Every single ounce of it. So we will see tomorrow. We have a few volatility catalysts. Tomorrow, obviously, the inflation numbers and possibly the Jackson Hole comments from Jerome Powell on the Friday session, and maybe a bit of Walmart earnings. But for the most part, volatility seems to have peaked today and now retracing back to about the 15 level. We will see if they can get a sustained push. You're going to need to have consistent fear in the markets. And so far, guys, it hasn't really been a fear and uncertainty sell-off. It's literally just been a rotation sell-off. You really didn't have one macro element that came to unwind the markets in the past 2 days that's really driven the markets into a fear-induced narrative. And, you know, something that proves that is kind of like the fear and greed index, right? We are still somewhat on the greedy end. So as long as you see healthy market rotation and not the entire market selling off, it's going to be tough to get some sustained moves on the VIX. Moving into yields right now, yields did drop. We had a pretty good bond auction, but as I said, yields are just going to be gridlocked until maybe Friday, but maybe even until September, until the rate cut, until we get the pace of the further rate cuts as well. The 10-year, you're looking for a break of 4.2 for the monthly downtrend, and for the 20-year yield, you're looking for a break of 4.7, which would not be a monthly downtrend just yet, but would kick us off into some very nice weekly price action momentum to the downside. It's been very sticky here, guys, since the month of April. Trapped between 4.7 and 5%, and I do think that'll be the case for the foreseeable future, and as a result, bonds are just doing a whole lot of nothing, but it is a very decent accumulation trade. Moving on to gold right now, gold up 0.99, 1% day on gold, reacting nicely from close to the bottom end of support. I mean, you can extend this little box if you really want to, couple dollars up, couple dollars down. I think you guys get the point, right? Down here is support, talking about roughly 3,300 down to 3,265 roughly. And up here is the infamous area of little resistance, talking about roughly 3,365 to about 3,400. So gold bulls and gold bears are still battling it out in this very tight range of price action. I won't really be playing gold either way. I mean, I guess you can argue there might be a swing trade long here with the stop loss below there, and then you'd kind of have to be targeting the absolute breakout, because if not, the risk reward doesn't make sense, right? You're not going to be taking profit there when the stop loss is down there. That's a risk reward of roughly 1. But if you're looking for the expansion of gold, gold sometimes has many faces. Sometimes it's a fear trade, sometimes it's an inflation trade, sometimes it's both. As of right now, it's been absolutely nothing. Just tightening price action here at the highs. The bulls have not lost control of the infamous 12 EMA that they've been riding on the weekly timeframes for a better part of the last 6, 7, 8 months at this point in time. And the monthly timeframes, although they are still very overbought, the bulls are holding. But if you do get a breakdown below this area, I would be very careful with gold, because that would be synonymous with maybe some much needed monthly downside consolidation. You could probably head to 3,000, 3,100. Moving on to Bitcoin right now, Bitcoin up a 1% on the day. Nice little push from Bitcoin, right? We know we had the daily downtrend in motion. The bulls kind of stopped this one dead in its tracks. There wasn't that much right there. A little bit of a line right there at about 112 where we kind of broke down into. I mean, I guess if you put a line right here, you could argue that there's some touches, but is it as strong as like this massive level down here? Probably not, right? But if you're looking at what stopped the bears in their tracks this morning, that level would probably be pretty close to what's it. That being said, daily downtrend is well underway. If you get a back test of resistance, the bears will be looking to capitalize to go for the one extra push. And who's in control of the weekly, guys? We still do have a bullish leaning bias, right? The higher lows here are about 112. If you break these higher lows on the weekly, it's a weekly downtrend, but similar like here, right? This was a weekly downtrend, but a soft one. Whenever you see a weekly downtrend, but a soft one into a key level of support, you have to go one time frame higher to understand what's at play here. You're in a very beautiful monthly uptrend for Bitcoin. Any movements lower could indeed be buying opportunities into the lower 100 range. And the 12 EMA is going to be curling up as well. So I'm kind of looking for these locations right there to make any Bitcoin swing trade longs. But what I have been doing is I've been accumulating some MSTR at these lower ranges right here, 200-day moving average into the lower 340 down to about 320 level. Decent area of former price action support, resistance, now acting as support once again. But the best thing about MSTR right now is the MNAV. It's trading at a very cheap MNAV right now. I believe it's about 1.55. Let me just double check that right now too. It's about 1.56. Historically, in very good times, this can push up to 2. This is really on the lower end of what MSTR trades for. As you can see, they've wound down a lot more than Bitcoin has actually wound down in terms of the levels, right? Here you can see the break of the May lows. Bitcoin has not done that at all. These are the May lows. So MSTR is lagging behind Bitcoin. So what could be an interesting play, the reason that I'm playing it, is like a catch-up trade to Bitcoin's price action. Out of the two, I'm preferring to accumulate MSTR right now, just because I believe that it's kind of like double undervalued, right? You can argue that Bitcoin is a decent buy if we pull lower, but MSTR might just be the best of the two if we're looking for velocity in terms of catch-up for Bitcoin's inevitable, probably down the line, right? Next leg of a monthly uptrend higher. So that's how I'm playing Bitcoin personally. Ethereum right now up 6% on the day, reacting very nicely, very close to our $4,000 psychological target. I mean, it got into about 4,073. So you guys know it's the overall location, right? You got some candle tops right there that you can argue that's what stopped the market today, and you would probably be correct. But overall, it's this entire range that you should be paying attention to. That being said, the daily bears are still in control. Nice move. If you want to see this reverse, you got to change the daily uptrend back. But what are you looking for during this entire trend consolidation period right now? Well, you're always looking for a weekly higher low. And I'm still a firm believer that if we come back down a little bit deeper into here, it could be a very decent accumulation period. But you should not be flustered if ever you missed the lows and you're thinking, oh, I missed it, I got to go all in right here. Just pace your buys, guys. Be very slow, because Ethereum can slowly trickle down in there. The consolidation phase in the market, is it done? Is it not? It's anybody's guess, guys. So the best you can do is when it starts tagging into here, you accumulate anything that you want to hold into the long term, right? Looking for a weekly higher low for possible trend continuation. And this support area, as I said, is about 4,000 down to about 3,700. So that is the region. Whether you guys want to play BMNR, right? This one, Tom Lee's fund. Whether you guys want to play this one, selling some puts on the market. Whether you guys want to play ETH-E, whether you guys want to play ETH-A, that is completely up to you, whichever product you choose. But all products that you are choosing should be based off the price action on the main Ethereum chart, so please keep that in mind. That's everything for your overall market rundown. Hopefully you enjoyed. Now let's dive into some big tech names. So moving into the list, we'll take a look at Apple first. Apple down almost 2% today. Not a very good day for Apple at all. But as we do know, the bulls are still in short-term control of this chart. Very nice push from Apple in the last few weeks. And now we're just into a bit of consolidation mode. Where are we consolidating into? Well, we got a lot of support to kind of ease into right here, all the way down to roughly 216 into these guys as well, which are also the 200-day EMA location. So that's about 216, 215 overall. I'll be looking to maybe play Apple on a bit of a back test. As we know, the weekly bulls had a very nice push, looking for a bit of a higher low. The weekly EMAs are also down there as well. That's like what we like to call confluence. Confluence of what? Well, confluence of the lower end of support down here, higher end of resistance right there, all of your short-term EMAs. So just pay attention to Apple. You might be looking for some short put opportunities into this downwards location in the event that you are interested in playing Apple. When Apple comes down this hard, this fast, sometimes you can find some decent opportunities if you're looking for some short puts. And if I were looking to sell some short puts, possibly into, the next week of trade or something like that, you can get some very nice premium down here. Even at the 217 location, they were paying about 0.5% at the end of the day. That's exactly the location that you kind of want to be building a position on Apple into if this is your type of stock. Moving into AMD right now. AMD at one point today, AMD guys, was down like 4%. Take a look at this move right there. Well, it was more. 4.7%, but the bulls did a very good job bouncing out of short-term oversold conditions, teens in the RSIs, and now they're trying to reset the hourly uptrend. That's step number one. Now, step number two will be, can they eventually recapture the daily uptrend? Well, we'll have a look, of course, but the rejection from resistance was very clear. 186 down to about 178. They unfortunately lost the daily uptrend, so now they got to get it back. But when you know you're losing the daily uptrend, instantly you should zoom out to the weekly time frame to understand what the bulls are trying to do. This is weekly support right now, 170 down to 157. And essentially what you're looking for here, guys, is just a little bit of weekly consolidation. It was a tremendous move towards the tops. And now AMD, when you find such volatile days, when AMD is down to 158 and hey, maybe I want to play some AMD down here around the monthly 12 EMA, down here in the lower 140s, and this morning it's down to 157. The first thing that you should do if you are a big fan of selling put options is probably go into the AMD options chain, take a look for next week, even though they have NVIDIA earnings, of course. And if you were a fan of playing in the lower 140 range, well, look what these contracts were worth early this morning. I can go all the way down here to 140. A 140 strike was available this morning for 80 cents, 75 cents, 70 cents, which is the 0.5% rule for one extra week. That is 140 on AMD. That, from this morning's decline, would have been an additional decline of roughly another 12% into next week and would be beautiful monthly consolidation, another nice reload area. If it doesn't get down there, you just get to pocket the juicy premium, and anybody who took that trade earlier this morning has already pocketed 75% of that premium. So as you guys can see, sometimes you don't even need to wait for things to come down there. If they do come down there, then you pivot. Then you start thinking about leap call options, adding to some shares, etc., etc. But when you have this short-term daily volatility and you're losing the daily uptrends and you're into weekly consolidation and you're not too sure, is the bottom here, is the bottom there, is the bottom there? But the one thing you are sure of is if it comes down to here, you're a buyer. Well, that's when the short puts come into play. If you're looking for some long directional bets, well, it's very tough to do when you've lost the daily uptrend, right? You kind of want to wait for continuation, confirmation, a recapture of the daily uptrend. And when you get a recapture of the daily uptrend, usually it's a better logical trade because then you can have a more well-established stop loss. So as you know on the channel, we're not in the business of guessing where the drops are going to stop. If you guys want to nibble a few shares right here for AMD, if you're holding for the next 3 to 5 years, that is different, right? We're not talking about, well, we can talk about both, right? For the most part, though, for quick swing trades, I'm using short puts in this market. For longer duration positions, such as buying shares, then you would have to refer to the stock's long-term valuation into next year. And even at 165, 170, the stock is not that overpriced at all. So if you have a 3 to 5 year time horizon and you're not too sure where the bottom is going to be, well, you would just start DCAing a little bit here, comes down there into the next area of support, a little bit there, and then you'll be full going for the next possible monthly leg of expansion. That's how you should be viewing this market if you have a longer duration time horizon and if your preferred tool is just shares and holding. Moving on to Amazon right now. Amazon down about 2% today. They were down a lot more. Amazon was down to 1.3% on the day, coming down and challenging this daily right there. Big move to the downside though, guys. We're currently reacting from support, which is 227 to 218. The bulls are trying desperately to defend this level as they did all the way back there. We will see if they can get it done, though. If they lose this guy right there, you have lost your daily uptrend. Push a little bit more, you lose the support range. It becomes resistance. You open up the door for the daily downtrend, and you open up the door for a bit of weekly consolidation. The higher lows are still set at about 211, and it'll just be some form of very awkward tightening range overall, right? If you're looking to play Amazon perhaps with some short puts, you should be targeting below here around the mid 2 teens, which is also where you have the 12 EMA on the monthly coming up at around 207, 210. So as low as you can possibly get on Amazon for this beautiful monthly higher low retest would be very blessed in terms of that situation. If you're just looking to accumulate long-term shares, you guys know the drill. Sure, you can nibble a little bit there, you can nibble a little bit there. As long as you are nibbling through monthly consolidation, if you have a 3, 5, 7, 10-year time horizon on Amazon, it's not gonna matter, right? Whether you buy here, whether you buy there, whether you buy there. Do you guys think that, let's just take any point in time, we go back to 2018. Do you guys think that people care if they bought at 81 or 78 or 75? Sure, it's going to impact your ROI, but where are we now? If you have a 3, 5, 7-year time horizon, please stop looking at short-term 1-hour charts to get the best possible entry. Just DCA, and you'll make your life a whole lot easier rather than trying to guess the instant direction of the markets every single day. That's if you're a long-term investor. Trading is different, but that's why I do cater to both styles of people when I do these videos. Moving on to Google right now. Google down about 1.14%. Google at one point today was down over 2% before recapturing about half of that. Now, moving into Google price action, you can see that they did flush the daily higher low, 198.78. So yes, indeed, we have lost the daily uptrend. We are rejecting from resistance again, 207 down to 202. We will see, can the bulls get all of this back and just do the V shape as if nothing happened? Or are we going to continue flushing one time, or maybe do the 2-time daily downtrend unwind? Both scenarios that I just described would just be looking for more weekly consolidation. The bulls were working with a lot of space right now, anything above 163, looking for a new weekly higher low, and the logical area of support is down here, 194 to about 186. The monthly 12 EMA is still curling up right now at about 180. If you ask me where I would like to sell short puts to start, probably mid 180, so I do need Google to come down a little bit more. If you are a long-term investor and you want to add to some Google shares, is it a good idea here at 200? Not that bad. Even the mid 190s is not that bad. The forward price to earnings is very good, and you're getting some pretty good bang for your buck in terms of just DCAing for some shares if you want to hold them for the next 3, 4, 5, 7, 10 years. We know that Google could be volatile this month as we are awaiting the ruling from the Department of Justice as to what the recourse is going to be for the infamous search monopoly. Moving on to Meta right now. Meta was down at one point today, guys, like 3% as well, right? Meta was down almost 3% before retracing and getting a lot of that back. Now Meta is trying to fill the earnings gap, but we ran into a little bit of bulls right here. Which bulls, you might ask? 734. These guys up there, but not only them, these guys from back there as well. So the bulls able to stop a little bit of the damage today. Short-term oversold conditions were very apparent. The RSI coming down into the teens, nice hourly uptrend, but as you know, they need to continue this hourly uptrend and give you more of a daily bounce, because this is an engulfing move. We had the daily uptrend, we have now lost the daily uptrend, so if you want it back, give me a nice sized bounce and then reset the uptrend, and then we can talk about some long continuation. Until that time, this is just an unwind of the daily downtrend. The bears will be looking to capitalize on any short-term bounces. On a weak bounce, they'll be looking to capitalize and go for the daily downtrend flush, which could see a fill of the gap from earnings and also just be further weekly consolidation. So that being said, where are the levels of interest for the longer term people who want to sell puts or something like that? Probably guys under 700, right? 680, wait for the 12 EMA to curl up below the support range right there. I know it's a wide range away, but on these very volatile days, as I showed you with so many other stocks, guys, you'd be surprised what you can get even on Meta. I know Meta is not for everybody because it requires a lot of capital, but I do also know that some of you guys out there have pretty big accounts. And if you take a look at some of these strike prices that were available this morning, the 690 strikes were like almost $3. That's not the most terrible trade for into next week. It is deep into the support location, and at the lows of today, that would have been an extra sell-off on Meta of about 6.5% into support by the end of next week, and possibly where you guys want to add some shares. The weekly bulls are still in control of this chart right now, though, looking pretty good. The higher lows are 693, so just watch out for the back tests in the event that we unwind a bit more of those earnings. But Meta is not looking too bad right now. In the event we pull back to the lower 700s, you may even see me add a couple more shares for my long-term portfolio. On to Microsoft right now. Microsoft continuing with the decline. I was telling you guys about this trade, right? When you don't lose the 12 EMA for 3-4 months, and you also never set a daily downtrend, and then eventually you do both at the same time, loss of the 12, and you set a daily downtrend, well, you might just end up in a situation like Netflix, where you go into extended weekly consolidation. There is nothing wrong with this stock. Nothing has changed on Microsoft since their earnings. They're still as fantastic. It's just very normal price action on a very extended move. That being said, your first line right now is going to be 498,500, the test of the 12. But as you can see, they didn't really set much support up here, kind of like the Netflix chart we're about to look at. So in that case, you need to wait for the bulls to show you where the bottom is. And you'll only know when they start making a big move and start going for the trend change, similar to what you saw on Netflix down here when they went for the trend change. Then you know, all right, we're establishing some form of a local bottom. For now, though, short-term oversold conditions, yes. 4-hour, not quite oversold just yet, and daily, not even close, meaning the door is still open. The bears can still push this one a bit back, and sadly, I mean, although there's some minor levels here, there's really not some big levels to be taking any trades off of right now. You would have to get me a bit closer to down here for me to sell puts into the previous highs, for me to be interested in this one at all. As of right now, Microsoft is just a hold for me. It's not a buy, it's not a sell, it's just a hold, as we are still slightly elevated on the valuation. I mean, it's 10% lower, but just take 10% off these multiples, right? And they're still very high multiples. Moving on to Netflix. Netflix, flat on the day. Not too bad of a day for Netflix, but look at the bulls. Playing some pretty good defense in this location right here, yeah? Talking about 12.11 down to 11.85. Decent. We will see, can they hold the higher lows? 1,200 is your daily higher low. They're trying to hold on to the daily uptrend. We will see, can they do it? If they don't, and we flush this resistance area, it's a loss of the daily uptrend, meaning when that happens, your weekly lower high is set, and the bears have a chance to capitalize and send us for the weekly downtrend flush and send us into further monthly consolidation. If you ask me, where would I be a buyer of Netflix? Well, probably down here into the $1,100, $1,000 area for some long-term shares. No swing trades for me in the short term because the bears do still control the weekly time frame. It's a bit tough to base some trades off of right now since, we're kind of a bit low in terms of the moves that have been done recently and very choppy in the market. So no short-term swing trades. The price action is not the clearest on this chart. We're still very extended on the monthly, but if we do come back into here, maybe you might find me adding some long-term shares. Moving on to NVIDIA. So NVIDIA, guys. NVIDIA at one point today was down like 4% overall, kind of like AMD, and they almost grabbed it all back. We did hit very oversold conditions early in the morning, 19 on the RSI, hourly uptrend, which is very nice right now, but we need to continue this hourly uptrend, and as a result, we need to get a very solid daily bounce. The reason being, we flushed the daily lows, right? This was a very nice daily uptrend, and now we've unwound that uptrend, so you need to get it back. There's only two ways to do that. Give me the full engulfing move and reset it up here, or they're gonna have to take a two-step process to reset it below the current highs. That being said, there's not that much time to do it, guys. Wednesday, if you ask me my opinion, it's going to be tough for NVIDIA to really break and moon above this all-time high level right there before their earnings, but it might also be very difficult for them to really crash down sub 160. So we may just be caught in a very wide range until those earnings. So I won't be positioning necessarily for NVIDIA, much before next week when I get more clarity on the short-term price action. But one thing's for sure, guys, today, and maybe even to next week, if we want to play some NVIDIA down there, don't say that there's no premiums. There are. If you want to buy NVIDIA at 140, no matter what happens with their earnings, well, you could do something like this, right? You can go into their earnings. I never recommend selling puts into earnings unless you really want to own the stock at that strike price because earnings are volatile and it can go either way. Look at the 140s this morning. The 140s were paying about 50 cents. Now, you might say that's not the best premium. I do agree, but we're saying if you want to own the stock down there, you can throw out a little bit of a contract. If it comes down there, it'll fill you and you'll get a nice 50-cent discount. If you want to go a little bit higher than that, the 145s, they were paying roughly 0.5% so far overall, and that would be exactly in that region right there. So although the short-term price action is somewhat unclear, we are now trendless. We've lost the uptrend. We need to get it back. We don't know if the bears are going to flush this or not. Well, you know that any consolidation further on the weekly time frame, which is a lot more clear, we're just really looking for a weekly higher low for possible further trend continuation. If we come down there, I will be a buyer of some NVIDIA stock, either for some longer term swing trades. That's when we can really explore some leaps as well, because your monthly 12 EMA will be curling up casually into the 140 location. Confluence, a lot of monthly resistance, which is currently support. 12 EMA, and at that point, if they come back down there really hard after earnings, you will also be daily oversold. That's what I like to find as a confluence trade. Usually those longs get a much higher probability than just going long here, crossing your fingers and hoping that the drop is done. Moving on to Tesla right now. Tesla down about 1.64. Sadly, Tesla just unwinding this move. They had the daily uptrend. Now we get the unwind. We're coming into the lows here. You remember when we broke out of this tightening wedge right there? Well, now we are still at the confines of the resistance and support levels down here. Resistance is 340 to 360, and the support is 300 down to about 260 as well. So we will see. Maybe I might be interested in a Tesla short-term trade if we come down to the lower bound of support. But if you're buying here, what you're expecting here, you want them to hold the breakout of this tightening range. You want them to hold the breakout, and you want them to go for it as well. The trading R&R is a bit mixed. Your stop would have to go below here, below 300. And then you're targeting top end of resistance 360. So it's not the best, right? Well, it is not too bad, honestly. It's about a 2-to-1 risk to reward. $40 of upside if you're right, and $20 of downside if you're wrong. But so far, the bulls just unable to piece together somewhat of a bottom as of yet. But we'll see. It's coming into there. We'll see if they can actually do it and go long from here or not. But those are the two levels. So if you don't know, you got to trade with a stop loss. Moving on to Palantir right now. Palantir at one point today, guys, was down another 9, almost 10%. And then the bulls bought the dip very, very hard. We came down super oversold conditions on Palantir, guys. The RSI on the hourly was a 12. When's the last time that happened on Palantir? I love using historical points in time to derive when's the last time this happened. Not even in the tariff sell-off. This just goes to show you how rapid this decline was in the last 2 days. It hit a 12 RSI. I would have to go back. I don't even know if Palantir has ever done that on the hourly time frame. Matter of fact, no. At least not in the last 2 years. Very oversold on the RSI. Nice to see the bulls come alive. If you ask me, was that the bottom on Palantir? It's tough to say, guys. They just set the hourly uptrend right now. We don't have the 4-hour, and the daily has also been unwound. It was a very nice daily uptrend right now. Big unwind on Palantir. So it's impossible for me to tell you if this is the bottom and the bulls are going to be able to get it back, either in a full V shape, which is the unlikely scenario. Let's be honest. When you get an engulfing move and lose the trend, the last thing you're expecting is a full V shape. If anything, maybe a tightening range and then do it, or the infamous two-step process, which is the best. But right now, with an engulfing move, who is favored right now? It is the bears for further follow through. They will have a second chance. So it all depends. How high do the bulls get on a bounce? If any, right? If they can get a nice bounce going, first bounce here, maintain the hourly uptrend into a 50 or 618 retracement size, well, then you have a very good chance of possibly resetting the uptrend when the bulls get tired on that first bounce. If you only bounce to here or the 38% range, and then you lose the hourly time frame again, well, then the bears have a very easy chance to kind of roll this trade over and go for a little bit more, right? So Palantir coming below their 12 on the weekly EMA, and the higher lows on the weekly are still down here, 128.67. That's a big retracement on the weekly timeframes too. That's a 786. It's very tough, guys. When you get such large retracements on the daily and weekly, it's very tough for the absolute V-shaped recovery. Not impossible, but the probabilities definitely are against you. My favorite way of playing Palantir, as I showed you guys in the introduction, big red days, free up a lot of distance on a lot of strikes. And if you wanted to buy Palantir down here, the best thing you could do is sell some put options. If it comes into you, perfect. You got your price. If it doesn't, you just get to collect some premium. But you guys know the drill, right? Palantir's still, overbought conditions is one thing, right? The monthly is still overbought, guys. The monthly, even with this drop, the monthly is still overbought. We will see. This candle closes in 10 days. Doesn't look like the best candle formation right now. Can they get it all back in 10 days? I don't know. It's not probable, not impossible. Nothing's impossible. It's not very probable. But if you continue into some consolidation, you might find me taking some Palantir positions, 120 down to about 110. If it comes there. If not, I will gladly play some short puts. I still have some Palantir shares, guys. I'm not really looking to reload just yet. But I assume if you have a next 3, 5, 10-year time horizon, nibbles, slight little nibbles as you kind of drop through the levels. If you want to, if you're the type of person that took profits up here and you want to reload your position, even in spite of the extended valuation, even in spite of the extended time frames, you can do it because you have a long-term time horizon, right? I just don't want people to buy the dip here thinking that it's over, going for a short-term swing trade, then they don't trade with a stop loss below today's lows, and then it drops, and then they just say, well, screw it. I'm just going to hold for 3, 5, 10 years anyways. No, you cannot turn a short-term swing trade into being a community member. You're kind of just cheating yourself, right? On to SOFI right now. SOFI down about 1.01, but at one point today, SOFI was down 6% and was a very nice opportunity to sell some puts onto the market. Now, what happened here is a few different things. Well, number one, we had the daily uptrend going, we had the daily higher lows, and now we unfortunately have flushed. Once again, the bulls getting rejected at resistance 24.50 down to about 22.5. So keep that in mind. Overall, SOFI not looking the worst, right? Especially on the weekly timeframes. You haven't really given back anything. The weekly higher lows are down here at the 20 location, but rather than guessing, is this the bottom on SOFI? Are we just going to go to the moon to 25, 30 bucks? I don't know, and neither do you. If you want to accumulate some long-term shares, no problem. The valuation down here is not terrible at 22.21. It's really not that bad. The market cap also can see some expansion. We've done this analysis many times. SOFI can be a 35, 40, $45 billion company in the next 3 to 5 years. That is very logical, but that doesn't also help us with short-term price action for some trades, right? Short-term price action for some trades. I'll be a big fan on any volatility to sell puts below the markets, guys. First in the 19 to 18 range, and if it drops there and assigns us, perfect. I'll do a bit more down here, 17 to 16, and we will just play extended monthly consolidation if it happens. I'm not saying it's going to happen. I'm just saying if it does happen, that's my plan. For the time being, I'll be selling here. I'm not buying any more SOFI shares. I think you guys know I bought all the SOFI shares I could possibly ever want down there. Not the worst time to add here, but it would be a nibble for me. And it will be a nibble as we move through the levels in the event that the markets continue unwinding. Moving on to Uber right now. Uber down about 1.67%. Back testing the area that we just broke out of, right? So choppy, very choppy daily uptrend break right now. Back test of support 93 down about 90 bucks. Super choppy day for Uber. Tough to derive whether or not the bulls in this environment will be able to hold it. The one thing that is for sure, though, is Uber's valuation around 90 bucks is not that bad. So if you have a 3 to 5 year time horizon on Uber and you want to nibble on some of these dips on Uber and you like the company, it's a high conviction company for you, the valuation definitely does support some further additions to some shares. Now, obviously, you're not getting the best price as we got when we were buying it, you know, for like literally the past year on and off, right? But still, not the worst. But short-term price action is a bit choppy. The bulls are going for the weekly uptrend expansion, but it's going to be a bit tough, right, for a lot of technology names in the current environment until there are clear recaptures of trends on a lot of these names that have lost their daily uptrends and maybe a little bit more clarity on the indexes overall. Moving on to TSM right now. TSM dropped today in a big fashion, right? From yesterday's close to today was down over 4%. Did anything change on TSM? No. And you know what's funny is that TSM, although it had rallied a ton from the April lows, TSM's not even expensive. We did the valuation at 245. And it wasn't even expensive. It's just that TSM is just getting dragged down with the rest of them, right? So clear loss of the daily uptrend right here. You guys can see it. It's clear as day, right? So the bears are in short-term control right now. Any bounce as a result of this further 1 hour uptrend follow through, well, any bounce, the bears are going to look to capitalize on, right? Since now we've lost a lot of the short-term EMAs, they'll be looking for the further downside flush and perpetual daily down. Well, not perpetual, but I like to say that. But it just would be continuation of the daily downtrend, essentially. If you're looking on the weekly, which is the clearest time frame in my opinion, you're just going for some weekly higher lows here. Beautiful consolidation on TSM. It's been about 5-6 weeks of that. To add TSM down here, 220 down to roughly the lower 200s is a decent proposition for long-term shareholders. If you're not trying to pick the bottom and you're just looking to add on the way down, decent into our next level of support down there, right? And for any people who are looking to trade options on this one or looking to sell puts, well, you guys know the drill, right? Beautiful area of confluence, 210 down to 200, 12 EMA is curling up into there. If you go for the monthly higher lows, you will also find me selling some puts down to that lower location. And as I showed you, there was some opportunities down there today, guys. I know next week is NVIDIA earnings and some of this premium is because of that. But I mean, guys, like there's some pretty good premium for some pretty good distance for a high quality company in a location that you want. So you can either wait for NVIDIA earnings and see what happens, or you can preemptively do it right away. That is up to you. I would not mind either way because at the end of the day, I'm just going for the level that I want overall. That is everything I had for you guys for the overall market rundown. Hopefully you enjoyed. Now, let's get into everybody's favorite section, shall we, which is the biggest gainers and losers of the day. Okay, so starting off, open door. This one's been the same thing the whole time, guys. If you want to bet on this one, you bet very small. It's a thematic play, obviously, for the recovery of the housing market and the recovery of this stock overall. If you want to play this one, you play it very small. You play it either very small with out of the money, very long dated call options, very small, or with shares, or you sell some puts to acquire some shares below the market. Oscar Health, fantastic opportunity in my opinion. If you look at Oscar Health today, it was down 8% overall, but there could be some decent opportunities to sell some puts if you wanted to acquire some shares of this company in the lower ranges. You can take a look at some of the puts for next week. You can get all the way down there in the 13.5s, even the 14s, which are paying some pretty healthy premiums down there, and that would be deep into the support range in the event that you want to accumulate some shares. In the other event that you want to maybe play some upside, well, I did a call option on this one recently, but I did go way far out. I went for January. I went for $20 calls. $20 calls. It's an out of the money call option, but this is what I like to call an asymmetric bet. If it happens, you'll make a decent amount of money. If it doesn't happen, you don't lose that much money either, right? So we're not trying to go all in YOLO trades. We're just trying to trade this thing level to level. Big support action right here, all the way up to the previous resistance highs that they've hit a few times over the last few years. Intel, government contracts, Trump administration wanting to take 10% of the company, SoftBank, $2 billion deal. Everybody knows the good stuff by now. If you want to trade Intel, you can sell puts at the lows if you want to accumulate some shares. If you wanted to go for some upside, some potential upside, well, I think the logic is very clear, kind of like Oscar Health, right? What are we going to do in terms of buying leaps? Are we going to go in the money for like January 2027? What are we going to do here? $10 for $15 calls? No, there's no leverage there. So you may as well just buy shares on margin. Even the $20 call options, are we going to go in the money at a 75 delta? No, there's barely 3-to-1 leverage there. That's not good enough. So if we want to take a small bet on Intel, maybe some out of the money calls, $30. You might remember last year on the channel, I played these and I took profit. We bought them like down here or something, or down here. We took profit in the resistance range. That's 26, 30 is just above. So if we're looking to play some small leap calls on Intel, that is what I would do, but keep the position small. You shouldn't make 60% of your account Intel. It's going to be a lottery bet. We'll see. The road to recovery for Intel is a very long one, guys. So just keep that in mind, right? Taking a look at Restoration Hardware. I mean, Restoration Hardware, it's a thematic play as well, right? Just maybe some shares here and go for the financing recovery play of the consumers with the housing market into next year, et cetera, et cetera, et cetera. My favorite play for that whole niche is still Rocket Mortgage, but I know some people are interested in Restoration Hardware. Moving on to Symbotic, one that was in our top analysis yesterday, right? The 12 EMA on the monthly is down here at about 35, and Symbotic had a big red day today again, flushing through the resistance zone right there. They lost the trend right now. Clear daily downtrend, bit of a head and shoulders pattern if you guys look at that as well, of course. And now just into weekly consolidation and monthly consolidation as well. This monthly candle closes in 10 days. Do you think really the bulls are going to be able to recapture this candle and make it look pretty in 10 days? Probably not, but in the event that you wanted to play a pullback into a somewhat logical area of support, right, targeting the mid to low 30s, well, you can get some good distance on some Symbotic puts if you wanted some shares down there. Symbotic, take a look at next week. I mean, the premiums here were crazy. If we take a look down here at the 35s, excuse me, there's no price right there. The 39s, I mean, you can price out the 35s. They're probably paying 25 cents. If you probably throw out a bid there for 20, 25 cents, they'll probably fill you, considering the fact that the 39s right now are 47 cents. So mid to low 30s, not bad. And this is why I love this strategy, guys, of selling puts. It's just so easy, right? You identify a level that you actually want the stock. If it doesn't come down there, you just pocket the premium. If it does come down there, you end up with the shares. Why guess? Why sit in front of your charts for like 7-8 hours a day guessing, well, is this the bottom on Symbotic? Is this the bottom? Are they really going to stop here? Right? Everybody likes to talk about ROI and running the wheel, a wheel and combination of leap call options, leap calls when stocks are ready, of course, not any time, but a combination of the wheel, so basically selling puts in the market, and leaps is a great combination. It provides good ROI, but also it provides some returns that nobody talks about. Return on effort, return on time, return on stress, right? It's very low time management, very low effort as well. You just pick a level and then just set it and kind of forget it. And whatever happens, happens. If you end up with the shares, you should be happy because that's where you wanted to buy them, right? If you don't, you just end up with the ROI and also low return on time. You see big volatility this morning, you write the contract for next week and you're done. That's it. Nobody talks about those returns. Everybody focuses on ROI. But it's not for everybody, guys. Day trading is not for everybody. If you're the type of person that doesn't enjoy day trading, maybe you're just not very good at it, maybe you just can't handle the volatility, but you want something to do which provides good ROI, 0.5%, 1% per week, and then you have the leaps as part of an X factor of a portfolio as well. Well, maybe this is a strategy that you could kind of practice, right? And kind of get your hands dirty a bit. Moving on to Reddit right now. Reddit down about 4.3%. They were down a ton more early this morning. Reddit was down 9-10% this morning. Is the drop done? Very difficult to say, guys. Sure, the bulls put in a nice bounce right there. 1 hour, they're trying to go for the hourly uptrend, but it's not much, right? Not much. The bulls gave a little bit back here, a lot back. You know what's funny is this move looks small, but top to bottom, that was actually an 18% move in just 3 short days. Very tough, guys. The price action is very wide. They did not set any support on the way up, so it's excessively difficult to derive where they're going to stop. But you do see this pullback location. The more clear location is down here, like what? 180, 170, 150, 205 we came down to early today. You guys know what I'm going to do. You know what I'm going to do. We're going to go to the Reddit options chain right here. We literally talked about it yesterday. We're going to go to next week and we're going to see how much were they paying? How low could I have got for a decent premium? I don't know. 170 for $1 sounds pretty good. Where were the 160s? Even the 160s up to like 60 cents this morning. So the midpoint 165 was probably the perfect contract. 165 by next Friday. Well, coincidentally, that is into the next big area of support. And you may think, well, there's no chance that it goes down there. Great. If you don't think there's a chance of it going there, why don't you sell the put option? You'll make a decent ROI on a weekly basis. If it does go down there, you'd probably be so surprised that you'd probably want the shares anyways, right? If you don't think it's going to go down there and you'd be happy owning them there, it's the next level of support, and the volatility can provide some very nice opportunities. Talking about Micron right now, 3-4% to the downside today. Overall, Micron just consolidating, right? Beautiful weekly uptrend overall by the bulls. We backtested support roughly 110 and a 99. Micron, guys, at the lower 110 region is fantastic in my opinion, especially if you have a longer term bias in terms of the next 2, 3, 4 years for the expansion of the AI infrastructure trade. Very low multiples here on Micron. Take a look at the price to earnings and the price to sales and the PEG. Very cheap. If Micron comes down here, you will find me again selling some puts under the market. I don't even need to check the options chain, guys. You know exactly what was available today. Lower 100s were available today, and even accumulating some shares. If you like Micron, if you're trying to play this good old monthly breakout retest and possibly run, maybe it's just something that you should be looking at as well. And we got a ton of other names on the lows today, but you know, I'm pretty sure that if I go through them, you guys will understand the exact strategy that I was willing to show you, right? But I know you guys want me to talk about Robinhood. Robinhood today, again, was down what? Another 7-8%. You guys know the drill. All of you guys that are very bullish on Robinhood, right? Well, maybe you can kind of add this type of trade to your wheelhouse in Robinhood, right? Because today, dropping on Robinhood, if you say, no, there's no way that they can go down to $80 by next week, well, why don't you take that bet with the market? It was paying 0.5% very early this morning. That would be a decline from the low of the day today at 100 down to 80, right? Down to 80 by next Friday would be another 20%. You might want to buy it if it comes down there that quickly. As a result, maybe you can sell a put option on it. If it goes down there, great, you get the shares. If not, you just get to collect the premium and you can stop guessing. Is this the bottom on Robinhood? Is this the bottom on Robinhood? Are they actually going to convert the hourly uptrend into a high enough daily bounce that we can recapture this daily uptrend that we've lost now? It's a lot of guesswork, guys. A lot of guesswork, right? After only 2 short days of drop and a nice bounce today, not enough information to say that the drop is over, but they did play nicely into this whole support region right there. The weekly is still, you know, somewhat extended. You got some divergence here that's currently playing out on the RSI, of course. So I look at all these things, guys. I know I look at all these things too, but the monthly is super extended. The valuation is super extended. So when something is very extended, the thing that I like to do is play short puts. And no, I probably wouldn't be a buyer of leaps up here. Everything is still a bit too extended for me. To the upside now, there's a few names here, but not that many. Figma coming up higher today. We talked about this one yesterday, and I told you guys that I would be enjoying it down here, sub 60. We got to 66 today, so you guys know exactly what I'm going to do. I'm going to pull up the options chain right now. Could we have gone shopping early this morning on Figma for next week contracts in the low 60s? Well, we can have a look here. They're still paying this. Early this morning, these were paying 80 cents, but that's too high. You know, we like to be a bit more conservative than that. Were they actually paying something at the 55 strike? Yeah, they were paying 30 cents, which is 0.5% for the week. Not too bad. A drop from the low price of 66 this morning would have been an additional down to 55. That would have been another 18% from the low of today through next Friday. And you maybe, if Figma goes down there, would have picked up some shares. If not, you just get to collect the premium. So the way that I'm playing Figma in the context of this big daily downtrend, which the bulls are trying to claw back one time frame at a time, but you don't know. because there's not enough price action. As a result, if you want to own the stock in these lower locations, we can sell some puts on them. If you wanted to progressively build a shares position, then you can do something else, right? You can nibble a bit there and set yourself some price targets. I'll buy $200 here. I'll buy another $200 there. I'll buy another $200 there. And if it drops in your location, that's fine. But, you know, don't take bets with the market being like, well, I'll just buy all the Figma that I want here and have no more money to DCA. You always want to keep some money to DCA, guys, because even if you only get 40, 50, 60% of the position into the market by the time it does recover, that's fine. At least you got something, right? But what you're not going to do is try to blast everything at one candle low, claim it's the bottom, because oftentimes you can end up somewhat disappointed. On to new holdings right now. They had fantastic earnings. I really like this one overall too, guys. And with the Discord members, we were talking about what's the best way to play upside on this one with a low amount of risk, because you guys know that I've been selling puts on new holdings down into the 1250s, down into the 12s when they were available. And we did cover their earnings just last week, and we did see that there was some very nice appreciation potential over the next few years. So if the appreciation potential is the next few years, and we want to kind of play this one with longer duration call options, I'm not saying that this is the most optimal time to buy calls. If anything, if we're buying calls here, you should also be ready to DCA this position if we drop one level more as a result of market consolidation. And the easiest way to play this is we go all the way out to December. If your thesis is 2027, 2028 price expansion of, you know, the market cap and stuff like that, the $15 calls, which are not that far out of the money, right? What is that? Like up 10% out of the money? Not that bad. These can also be dollar cost averaged if we drop back down to $12. These are only $3.30. They're not that expensive for a lopsided bet with the market, going for expansion of new holdings into the $16, $17, $18 level in the next year or so, and then a bit further than that as we approach deeper into 2026 and deeper into 2027 as well. Not a bad bet, and a small bet that you can make with the markets. I'm not saying that you should go all in, but at least when the contracts are very cheap, you can buy a couple of them. Then when some of them run 2x, you can cut half, make the trade free, and then just kind of ride the rest. There's a lot of names that were available today. SMR came dropping into support as we were talking about yesterday, 31 down to 26. This one as well. I'm not going to check the options chain, but you guys know the drill. You could find some trades down there into the 12. Oh, this chart is really squished. You could find some very easy trades down there into the 12 EMA or possibly even lower if SMR is your thing. HIMS, same concept. You guys know the drill. We talked about it yesterday. You could find some very attractive short put opportunities very early this morning. HIMS came down, tagged the 12 EMA, tagged the Novo Nordisk lows as well. But the support range is down there, 36. 36. Can we find any premiums down there? I think you guys know what the answer is going to be. Could we find premiums on HIMS down into August 29th, which is next week, into the high 30s or mid 30s? Well, yeah, they're still available there now. Look, I mean, today you got the 35.5. If it'll show me some data, well, it's not going to show me data anymore because the markets are closed, sadly. But look what you could find today at the 35 strike. You could find these for 25 cents from the lows of this morning. This was a lot lower, right? A lot lower, all the way down there, 16 extra % into support. So as I say, guys, right, all these stocks are the same concept. We're going to kind of end the analysis there. We already talked about MSTR. Obviously, we can go very deep on this. But I want you guys to understand one clear thing, right, from this strategy. Now, you guys know me. There's a ton of different strategies that we can use in the markets. We can use call debit spreads when things are actually into support. We can use leap call contracts when the technicals, daily oversold, support areas, right, consolidation, extended consolidation periods, and valuations line up. That's when we can use leap call contracts overall. Call debit spreads, you really need clean market price action to the upside, a clean uptrend on SPY and QQQ, not too much volatility to go for those 2-3 month call debit spreads type of things. You guys see me do those types of trades. But why do I love the wheel so much when we have big volatility? Because it prevents me from guessing. Is this the HIMS lows? Is this the HIMS low? Is this the HIMS low, right? And if I'm not looking to build, this is not for people who are looking to build shares for the long term. This is people just looking to farm the markets for easy trades. There is no easier trade, guys, than identifying a level that you would not mind to buy stock at to run the wheel with and benefit from the extreme amounts of volatility that days like today and yesterday can bring to sell puts way under the market. If it comes down there, great. You get the shares in the location that you wanted. If it doesn't come down there, great. You make 0.5%, 1% per week, and you just get to pocket that very juicy premium. You get your buying power back, and you can do this all over again week in, week out, as we pretty much do on the channel and in our Discord group every single day of the week. So with that being said, that's the end of today's video. Hopefully you guys enjoyed. If you did, consider dropping a like, consider subscribing to the channel as well. If you're new, would love to have you back. We do these every Monday to Friday after the close. And last but not least, you guys can obviously leave a comment down below if you want me to answer one of your questions. I'd be very happy to answer. And last but not least, in the event that you guys wanted to join a Discord community of like-minded traders and investors, whereby we trade the wheel strategy, we identify opportunities for short duration call options, call debit spreads, even leap call contracts, swing trades with shares, because yes, I do those as well, but they need to be in very clear areas of price action, and certain things need to line up for me to open those trades. If you guys wanted to participate to us, the link in the Discord, is down below in the video description. You get access to all of my trades, whether the wheel trades that we talked a lot about today, the directional trades, call options, things of that nature. A lot of these trades from the last 2 months are in front of you right now on the screen. The green check marks are wins. The red little circles are losses. You get access to all those. You get access to our private morning live streams. Every morning I trade live for about 2-3 hours at the market open, and then take all your questions on your stocks, your options, and your long-term portfolios. It's a great place to interact with me. I answer everybody's questions. So if ever you're confused on what you should do with the trade, stuff like that, and you want my non-financial advice, of course, well, the great place to ask me is in the live streams. If you can't be there, no problem. They're recorded. And you can also ask me all your questions in our chat rooms all throughout the day. You get access to my private video educational section as well, where I go through technical analysis, fundamental analysis, different trading strategies, whether it's call options, credit spreads, debit spreads, stuff like that. You also get access to a lot of other educational videos in there, namely how to grow an account, small trading account, medium trading account, large account, because all three will have different allocations of strategies that you should be using to best maximize your returns and or minimize your risk. And also, we don't talk about it too much, guys, but we build bulletproof long-term portfolios. We're big fans of optimizing long-term portfolios, adding some names to long-term portfolios when they represent the best risk to reward, in my opinion. And you get access to also all of my watch lists and all of my charts whenever you see support levels, and also, earnings presentations and stuff like that on hundreds of different companies. You just get to copy and paste my chart layouts, and it comes with all of this and all my watch lists that I use to trade every day. Just an added benefit for our members. If any of that interests you, the link is always down below in the video description. Hopefully I get to see you join us soon. And if not, I guess I'll see you right back here on the channel, guys. Pleasure as always. Take care. Have a great Thursday tomorrow, right? Have a great Thursday in the markets, and I'll see you tomorrow after the close. Peace.